My name is Jason Mercer. I'm the Toronto Real Estate Board's Senior Manager of Market Analysis. I'd like to take a few minutes of your time to go through our most recent economic and commercial real estate update. We've seen some very positive results coming out of the Canadian economy over the past few months. Certainly we saw an acceleration in gross domestic product growth in the fourth quarter of 2010, and that's carried forward also into January of this year. We saw gross domestic product growing by about 0.5% between January and December, a very, very strong result. And it's also important to break down this overall economic growth into different sectors of the economy, especially when we're thinking about commercial real estate in the Greater Toronto Area. So manufacturing led the way. We saw growth in manufacturing close to 3%, coming in at 2.8% in comparison to December. Related sectors to manufacturing also grew strongly. So for example, we saw growth in transportation and warehousing coming in a little bit over 1%. We saw wholesaling also coming in at close to 1% as well. And these are all sectors of the economy that feed, quite directly into commercial real estate, especially those transactions that are put through the Toronto MLS system, where we're seeing the great majority of commercial real estate deals accounted for by the industrial segment. And this is both in terms of leasing and sale transactions. And so why have we continued to see, pretty strong output from the Canadian economy, and why is this going to continue to feed through then into pretty strong demand for commercial real estate? Well, obviously interest rates are playing a role. You're seeing businesses take advantage of low borrowing costs, investing in new machinery and equipment, measures to become more productive, more competitive on the world stage, and this obviously also ties into the need for real estate. If you're buying new equipment, new machinery, you're probably going to need a place to house this equipment, and that also feeds through into the labor market. As companies' sales books have expanded, they started to look towards more people, look towards hiring more people to help them produce the good or service that they're interested in. And so that also feeds through into the need for space. If you're bringing on more employees, chances are you're going to need more space to house them in that commercial real estate market. So when we look at the number of lease transactions, for example, that were put through the Toronto MLS system in March, they were down in comparison to last year. We saw about 568,000 square feet of space leased, and this is down from about 860,000 at the same time last year. But I think it's important to note, with the strong economic foundation that we've discussed, strong growth in GDP, strong employment growth as well, and obviously tied into low interest rates, we're going to continue to see an expansion in the Canadian economy, and that should continue to lead to pretty strong demand for commercial real estate in the Greater Toronto Area as we move through 2011. Thank you very much for your time, and I look forward to speaking with you again when we release the April commercial statistics.
Brought to you by GTA Realtors.